Up next on Dukascopy TV, we're taking a look at one market insider's forecast for the Aussie dollar US dollar. Dukascopy TV regular Cara Ordway of City Index is on the line with me now. Cara, you've gone for 89 on your 1 month forecast, a level we've already seen tested this week. We know that expectations of tapering and a US dollar recovery are strong factors in Aussie dollar performance. Walk us through this price prediction.
That 89 is actually at the lower end of my predictions for the next couple of trading weeks. I would expect that range to be more in the 89 to 92 mark. I think really technically there's some indication that we may push to the upside of that band. I think really at the moment it feels like markets are in somewhat of a consolidation mode. Equities feel well supported and there's a general risk positive sentiment flowing through. I think really there seems to be some hesitance from traders entering into trending trades. So that Aussie lower downward trend trade that we saw in the past, there's very much reluctance from traders to get back into that trade. I think that really centres around the concerns over the US data that we've seen over the past couple of weeks or so that is potentially distorted due to that bad weather. So really that reluctance is most prevalent in this Aussie dollar cross, and I think really that shows in crosses like Aussie yen, where we've actually seen some buying amid this rather positive risk sentiment. So look, a lot of the shorts have been closed off. We're in somewhat of a bullish trend at the moment. I'd look to the upside around the 92.10 in the short term. That's the Fibonacci level that we're looking for, and really a support around the 89.70 mark. I think really over the next couple of weeks there'll be a focus on the dividend repayments that will be repatriated into the Australian economy as part of that support, and so really restricting any declines that we see over the next couple of weeks. Really any catalyst that we're looking for, potentially it will be the non-farm payrolls in March. That should give us some indication as to whether this US data readings have been just a blip or really longer-term worries for the US economy. But as I say, rather stable at the moment. I think that's highlighted by the fact we've seen a lot of volatility in the CNH crosses over the past couple of days, but yet we've remained fairly stable.
We're heading lower still over the midterm with a 3-month prediction of 86. Tuesday's RBA notes highlighted a period of steady rate cuts is likely to be on the agenda. Could this be the driver in your expectations?
Certainly the RBA has a huge part to play in where the Australian dollar goes over the longer term and the medium term, and the Federal Reserve as well. That tapering, they've got a huge amount of cheap money flowing through the global economy, and that tapering is going to be a huge part of where the US dollar goes and in turn where the Australian US dollar cross goes. I think at the moment traders are very much focused on the fact rates will be low for some time to come, probably going into 2015 now for the Australian economy, and there's likely to be more jawboning from the RBA in terms of pushing that currency lower. We know that Glenn Stevens really wants it down more likely around the 85 mark. So look, a focus on local data will also be in play. Unemployment is set to hit 6.5 over the course of the next year. Consumer confidence numbers have also been banned, which doesn't bode well for the Australian dollar cross, and CapEx numbers will also be very much in focus. They're actually out later on this week. So look, it's likely to head lower. There's going to be more focus on what China are doing. There's certainly some concerns there. There were poor flash PMI numbers out last week, and that's really very much still a bleak reminder of worries that centre around that region, and likely to push that down to that 86 mark that I mentioned.
You're clearly seeing a long-term bearish trend on the Aussie dollar with a 12-month forecast of 84. Is this where you see the dollar's overvaluation curve ending?
No, I don't think so. I think this trade has a very long-term run to it. It's been fairly well publicised this week by some of the major banks that they've adjusted their predictions and forecasts down to around actually the 66 to 70 cents levels. So certainly a lot of big bearish views out there. Look, it seems like an extreme call, especially as we're sitting fairly stable, as I said before, in the short term around that 90 level. But that divergence in central banks, that the Fed and the RBA is going to come very big, and predictions in terms of economic forecasts from those regions is likely to push that currency lower and lower. I think traders will very much be focusing on the fact that commodity prices are likely to be lower. There's going to be reduced government spending in the Australian local market, and there's also going to be that narrowing because of those interest rates in the US bond spread. So it's not a good outlook for the Australian dollar at the moment. Certainly it's not going to be an overnight fall, but it's definitely a work in progress. And as I said, a very big reliance on what the Fed does. That QE3 is going to be that tapering of QE3 is going to be a big factor on where that US dollar trade goes, and certainly the carry trades that we've seen in the past is no longer going to be enjoyed.
Cara, thank you very much. Want more hot tips on where to place your trades? Then stay tuned to Dukascopy TV. It's goodbye for now.